The President of the United States is suing a bank for freezing his company's accounts. The bank's defense? It says those accounts raised money laundering concerns. This is the contradiction Washington is trying very hard not to look at directly. From Berlin, the picture is almost too neat. A sitting president whose family business had more than 300 accounts closed by Capital One is now waging a legal and political war against the very bank that flagged him. And in Europe, we tend to notice when the man rewriting the rules is also the man the rules were built to catch. Let's walk through it. Back in the middle of 2021, Capital One quietly shut over 300 accounts belonging to the Trump organization for years, no explanation. Then last Friday, in a filing to a federal court in Florida, the bank finally said the quiet part. The accounts were closed for reasons of money laundering prevention after months of investigation into suspicious transactions and risks. The bank stops short of accusing the Trump organization of actually laundering money, but it insists its terms allow it to close any account at any time without giving a reason, and that it gave the company months of warning and multiple extensions before pulling the plug. The Trump side tells a very different story. Eric Trump made the lawsuit public, calling the closures a clear attack on free speech and free enterprise. The family argues Capital One dropped them purely because of Donald Trump's politics. Their complaint even points to the storming of the Capitol on January 6, 2021, an event that left 5 people dead, as the political trigger for the bank's decision. How exactly that connects, we cannot say. The court redacted large parts of the filing, and here is where the outsider's eyebrow goes up. Because this is not just one man against one bank. This is the opening move in a much larger campaign to deregulate the American financial sector, to strip away rules to Trump's own advantage and to the advantage of his allies in the crypto industry. The crypto world has a word for being cut off by banks: debanking. Tech investors like Marc, Andreessen, and Elon Musk have built a grievance around it, claiming conservatives and crypto founders are being quietly frozen out. Concrete proof of systematic discrimination? There isn't any. But grievance rarely needs proof to become policy, and it has become policy. About a year ago, Trump signed a decree forbidding banks from dropping customers over their political views, and his government began demanding documents from lenders to plan further anti-debanking measures. The man who sued a bank for closing his accounts now commands the machinery that regulates every bank in the country. Meanwhile, the family's money has moved. The Trump organization once meant hotels and golf courses. Today, it earns far more from digital currencies than from real estate. So when the president champions crypto, he is not merely deregulating an industry, he is deregulating his own balance sheet. In Germany, we'd call that a conflict of interest. In Washington, apparently, they call it Friday. That's the view from here. What does it look like where you are? Drop it in the comments and subscribe for the perspective American media won't give you.